Hello guys, welcome back to Verified Gains. Hope everybody is having a good start to the week so far. Let's dive right in and start talking about Bitcoin to start off the video for today. And guys, I just want to emphasize now is time to get serious, okay? I just want to make a little point here. You don't get a lot of chances in life, in general, and more so to make life-changing money. And right now, that's exactly what we're trying to do, right, guys? So, we need to take this seriously. I'm uploading these videos on a weekly basis, multiple times throughout the week. If you guys are already not invested, not dollar cost averaging, then I really don't know what to tell you. And even though this is not financial advice, I really hope that you guys are able to take away, um, some tips and tricks from these videos because I certainly am taking this market seriously. And I know for myself that I don't get a lot of chances such as these in my lifetime. And I'm going to take full advantage of this crypto cycle to make life-changing money. Okay, so let's see what's going on in Bitcoin. So, it might be helpful to look at the actual Bitcoin chart. Sorry about that. So, so far, and starting from the last video, we talked about how we have this key support line at the $92,500 mark. With the MACD looking like it's about to cross back over the signal line. So we'll see if this is a good enough bounce. And now back to the upside. Um, back in December, I looked at this one green candlestick with a long shadow to the downside. And I said, okay, perhaps we're going to start forming some real bodies, meaning, again, the thick part of the candlestick to really fill in these prices. And that is exactly what we did over here. And, um, we tried to bounce back up, but then really had a hard reset, a hard rejection around the $102,000 mark, and we went back down all the way to $92,500. And we had a couple of days where we really weren't doing anything. And so there was probably a lot of buy and sell pressure, or really no activity at all. Could mean either case. And now we're starting to go back up. But pay attention to this particular candlestick over here. I mean, how do we exactly interpret this? On this particular day, the low was 89,000. So we actually broke down below $90,000 for Bitcoin. And now the question is, okay, well, do we have to retest 89,000? And that really is the big question right now. Um, it doesn't always have to fill in the price, but that is sort of, my own philosophy in terms of how I do my technical analysis. So I really wouldn't be surprised again if we tried to fill in that $90,000 mark. But I'll show you an example of why that always does not need to be the case. Um, look back over here, back in August of 2024, you can see that there's this one, red candlestick on August 5th where we did form this long shadow. But since we've moved on and we never really had to fill the bottom of this shadow, which was around 49,000. So we really never retested 49,000 since, August 5th. And there are multiple example like this. And so, of course, the lesson is, well, it doesn't always have to fill in towards the low of the candlestick, but it is certainly a possibility if it ever does. For now, if you're dollar cost averaging around the $92,000 mark, that's a pretty good price to be in. Um, and so right now we're still a little bit cautious because more time has passed and now we're moving farther and farther away from the yellow trend line. For example, the next 24 hours, our price point would have to be, let me zoom out a little bit here. Our price point would have to be around $110,000, okay? And really, we'll say with confidence that we're in more of a positive market once we open and close and form a green candlestick above the yellow trend line, which now at this point would be, above 110,000 compared to, early January when it was around 107,000. So we still have a lot of homework, okay? Let's put this back to auto. Let's see how the pi cycle top indicator is doing. So, right after the election, the US presidential election, we had this sort of sharp rise to the upside. And you can see by the curve of the pi cycle top indicator. Now, this is actually the 111-day moving average. So that's the red curve. And then the green curve over here is 350-day moving average times 2, okay? And mathematically, that should make sense if you think about it. But what we start to see, actually, if you pay close attention, is this sort of sideways movement since, mid-November has started to make this 111-day moving average a little more flattened. So it's curving the other way now, meaning I suppose the degree of slope is now decreasing. Okay. Um, and what does this mean? Well, at the end of the day, this is a lagging indicator, and in the next 1 month or two, we're going to see further flattening of this curve over here, unless we do see a sharp movement to the upside once again, once the US presidential inauguration occurs. Now, to us, it's a good thing because we don't want the pi cycle top indicator to signal too early in the cycle. And what I mean by that is we want to see a steady increase, like what we've seen in the past 2 cycles, meaning we kind of want only one, there to be only one top. Now, arguably, this was a double top cycle. And, the problem with 2021 is that the pi cycle top indicator signaled way earlier than what we had anticipated, or at least what I had anticipated. So if we just look at other indicators, I mean, my prediction would have been around October 2021, which is where the second top occurred, but definitely not April. So this was unexpected for me as well. And this is exactly what we're trying to avoid seeing. Now, look, if the same thing happens this cycle where we see a pi cycle top in the springtime, much earlier than September 2025, then fine. I'll sell my positions and then I'll reassess. But we're not going to take the same risk as we did back in 2021. Now look back at 2017. Okay, so here we only had one true top. Okay, there's really no, fake out. There's really no false positive. This other indicator that I'll talk about later, predicts it around December of 2017, and that's around when the pi cycle top indicator also signaled. So this is what we're trying to see. It's fine if there are dips here and there, but we just want to see a slow and steady increase until we really move exponentially all the way to the pi cycle top towards the end of the bull cycle. And then something similar to 2021 happened back in 2013, although to a much significantly different degree. So here we see that the pi cycle top um, actually signaled much earlier in the bull cycle, and then before entering a true bear market, it went up again. But the difference here is very significant because you can see that around here the price of the Bitcoin was around 150 $150, let's say. And then during the same bull cycle, the second pi cycle top was $1,000. So there's almost like a 8 to 10x difference between the two pi cycle tops. And that is also not something we want to miss out on, but to what degree would we have to risk manage just in case that this is the true pi cycle top, the only pi cycle top, and we end up entering a bear market. And that is why this second indicator is very helpful, just to make sure that perhaps this was a false positive. But we'll talk about strategy uh, later a little bit more. For now, we're going to stick to our plan, which is to look out for the pi cycle top indicator. Okay. Um, so let's go back to Solana, which is what I was looking at initially. Um, Now, just to recap what we were talking about last time. So, for the past few weeks, I was really interested in this key price of $187. And right now, earlier today, I did change the color back to red to indicate a resistance line. Let me just turn off the bicycle top. And you can see that we are retesting this price of $187 pretty frequently. And the most recent 24-hour candle has started to form below it. And, um, in my previous video, I also drew this $160 support line, which would be sort of like a bad case scenario, if you will. And we did have a little bit of scare here because this particular candlestick actually broke down below $170, but quickly bounced back up. So very similar to Bitcoin, my hope is that we'll continue to move up, but just keep in mind that we could fill the 170 again, and we could actually retest 160 again. Of course, in the bigger scheme of things, I'm not quite sure why, that would be the case, other than um, perhaps it's like large institutions trying to trigger, stop losses for the retail investors and try to get in at better prices. So trying to accumulate these layer one assets at better price points, which is definitely possible. I mean, you know, as a retail trader, you really cannot copy trade, um, like professional trading platforms. Okay, you know, basically the quant guys is what I mean. So okay, so I mean, just to conclude, I really do like this $187 mark. I think this is a really good opportunity to continue dollar cost averaging. I know that last week I had bought in at $187. I'm not sure if some of you had some ounce of doubt just because we started retesting below 170. But really my best advice is to just come up with a strategy, have some conviction, continue dollar cost averaging so that you don't get spooked by these sudden drops, okay? And what if it did? Well, I'm going to continue dollar cost averaging. So overall, my cost basis is still very solid. And just keep in mind that I had been doing that since end of 2022. Um, and that really is the power of long-term investing in cryptocurrency, which if you did miss out this cycle, we're going to start reaccumulating in 2027. So you could even take this bull cycle as simply a learning opportunity without spending or investing any money. Okay, so just keep that in mind. I was in the you know same boat back in 2017 when I was watching on the sidelines, studying the market, reading the Bitcoin white paper. So, it does take a little bit of diligence and, self-learning to set yourself up. And really it's all about the setup, okay? There's not a whole lot to talk about meme coins, so I probably won't talk about it too much today. We are starting to see a little bit of positivity in the meme coin market in general, but here we just have to be patient. Um, I was a little bit earlier, worried about Popcat, but so far is holding the 50-cent mark. And I'm really hoping that we start to see some move to the upside soon. But we may have to wait until next week because there's a lot of sort of other macro stuff going on, including US politics. So we'll just have to be patient for now and see how things pan out. But for now, I'll just mainly focus on the layer ones and see how the price moves upward from there. And then trust me, meme coins will follow if things like Solana, Ethereum, what have you goes up. Okay. So once again, thanks for watching, thanks for listening in, and I'll see you guys later. Bye bye.